Hello guys, glad to have you on board again. Today I have to make this one quick because I have an appointment in 45 minutes, so I cannot spend any more than 20 to 25 minutes with you guys today. So anyway, let's try making it quick but consistent anyway. So having a look at the economic calendar, we're going to make it straight to the point in here. The question is, there's just one thing for the week to come, the ECB on Thursday. The rest is just pointless unless we've got some unexpected market catalyst like Trump tweets or whatever the fuck this is. So anything aside from planned events in this economic calendar, but a Thursday ECB event. So remember that the markets is pretty fucking expensive. Remember that we're trading below resistances. We're hoping for huge market catalyst from the central bankers, so still straight into the paradigm, which means we're expecting that even if the conditions gets worse, we can have some support from central bankers to compensate. And we think this is going to last forever. This is definitely what I think is the biggest mistake the market has made recently, thinking that this is endless and sustainable, as this is obviously reaching its end and a very unsustainable structure. So until then, we have to play by the rules, and if the markets just wants to go higher, hoping that the central banks can deliver a little bit more by the next update and the next and the next and the next until they fail to provide what the market expects. As you might understand, market's expectation rises parabolically, reality is dampening itself. So as we said, there is a crossover in here. There is a moment in which expectations will not be met, and probably at that stage market will start dropping and figure out that the paradigm wasn't actually true. And when the market gets to be disappointed, when he priced in for the best and best hopes, we generally gets to fail and retrace rapidly towards support area. Still is my major scenario. We're going to develop this one throughout the charts, obviously. Let's get to cryptos first. I made yesterday an update right here into TradingView. So I'm not going to get over this one over again, as I need to be quick today. So I invite you guys to have a look at this one. I think we're early building some potential reversal on the BTC dominance with a binary choice. Either you pick to buy the Ethereum Bitcoin charts, spread chart, which means you're going to have to sell some BTCs to buy your Ethereums. I don't want to be doing this because what I have in my Bitcoin portfolio is buy and hold Bitcoins that I definitely don't want to touch. So instead of doing this, I'm taking high level of risk by just buying Ethereum speculatively without selling Bitcoin in front of it. All right, so I expect dominance to go down. I expect major altcoins to profit from this. In either a bullish market, in that perspective, altcoins will probably searching for their resistances. I highlighted those resistances to be like $530 at least for Ethereum, which gives us a pretty interesting target. But still, we're pretty far from there. We're not going to be there by 2 weeks. It's gonna be a long shot. Early ranging activities to eventually get to break resistances one by one, and only then when we'll actually get to manage to break the 240 is, I think, where the market will start finally to forecast the trend to set itself. So I think 240.50 is the area where risk management must be done. Obviously, that is the resistance daily context, the resistance 4-hour context. So risk management right in there. Whenever we get in here, I think it's going to be just causing some sideways action or tiny pullbacks, but I think anyway afterwards probably some bullishness to show up. It's just that in this area it's going to look like a range. The trend will emerge when we'll break above the 330 area. We're heading toward possibly the target area. So this area is where there will be the FOMO thing, all right? This is where we're going to go straight line and profit from the trend. All of this area can be pretty shitty. Going sideways, hesitation, you know the drill, the speculative trades, which means if you try to be only proven right, this is not going to happen. The market will prove you either right or wrong. It will just oscillate between the two, and your only goal in here is to risk fucking manage. Just making sure you're not taking too much risk, still waiting for the gain to show up later. All right, so it requires patience and stuff you must already know. If you get into speculative trading, I hope you got them learned that lesson, even if that means learning it the hard way. Patience, resilience, and strategy application is the key for successful speculative trading. If you want easy, fast money and stuff like that, definitely doesn't meet any such thing on speculation. All right, so be patient, be resilient, be consistent, don't take too much risk, tiny position sizing, stuff like that, and only when you get to be fully proven right, you can start to reinforce, leverage the position eventually, and stuff like that. Anyway, so cryptos, I'm following the plan I gave you. All right, so large stop losses because a lot of uncertainty in the area. I've been using the Bollinger Bands instead to show you where the volatility limitations were set. So if you're setting your stop losses in here, just god damn it, we can go there without a single problem. It just needs like a huge burst, a bad news, whatever this is, we can be there in just an hour or even less. So don't put your stop losses out of volatility areas. I'm buying in here because I think we can very well reverse without going in there. But this is where the very low risk prices are. But in order to get there, you must hope and brace for a bad news. I mean, waiting for something ugly to show up, people start selling for that reason or stop lost. But if it doesn't happen, what are you going to be doing? If the market instead starts to surge in here, you're going to buy your resistance? No way. So I'm buying a price that I'm totally aware is not pretty good. It's an average price more than anything else. But if you get to forecast this out of a daily and weekly charts, yes, they're pretty fucking interesting. Like it means buying in here 180 instead of buying 140. If my goal is to target 530, that doesn't nearly make a sustainable difference. It just makes a tiny bit of a difference. Obviously, I could have better prices. I could have more Ethereum if I was waiting for 140 instead. Like I said, does that really matter? All that matters is how the risk management is performed. I'm totally aware that I could have had better price, but I could also just miss the shot if I just don't take it right now. So I've got the signals, I've got the risk limitation, I'm going in. Even though, as I said, I'm totally aware we can go lower. That's why we have a stop loss. All right? I'm not here to catch the bottom for sure. All I can tell is that going lower, possibly. Can we reactivate right here? Possibly as well. So I'm buying in and I'll see whatever the market does. I allow the market to go a little bit lower. I just don't allow it to go below 100. So if we ever get below 100, it's definitely an invalidation type of scenario for me. But I sincerely doubt that. Anyway, stock market. So Wall Street, obviously, same old story. We're always bullish. We're so strong. We're so great. We're so good. We're so whatever the fuck we can think you can think you are. Still the same old shit. The U.S. administration just pure and simply lying, or yeah, okay, I don't see any other words. Yeah, they're just lying. So as you can see, the Chinese administration doesn't say any fucking thing regarding the negotiations that have been going on. All we can say is that nothing has been reached out to. Otherwise, we would have known. But still, the U.S. administration said it was a great set of deal. We might eventually get to reach out something. So there's still the same old shit that they've been selling us until this, all along this year. So we're now 9 months fucking in the same rhetorical story in which US said there's going to be a deal, the deal is going to be great, and we're going to get it by next week or by the next one, but it's close, it's coming closer. Remember that this is what's been sold to us for 9 fucking months. And the worst in that is that there has been absolutely not a single counterpart for those manipulations. They've been putting the market upward with very stupid reasons that still hasn't been met, which means we haven't been solving any fucking problem. The only thing that has been done in between is just the central bankers talking and fucking talking again until they actually get to act last month. And the big question rising right now is, did they lie again as well? Because remember what's been said out of the last Fed meeting as well was, all right, we're putting down the Fed rates for a quarter point, so 25 basis points, And this is the only one. There's not going to be another one. We're certainly not entering a reduction rate cycle or something like that. It's just, all right, something to just please the market, and that's just a one shot. And guess what? Just 1 month later, 100% of analysts forecast another rate cut. So did they just lie to us saying, all right, you're just going to get one, but let's make another one, and next month is going to be another one, and we'll finally be into a negative yielding or a reduction yield cycle. So a lot of people have been lying recently. Is the Fed about to lie as well? I don't know. All I can tell is that there's probably going to be a 25 basis point cut, and so far, who can we actually trust? No one, because basically Trump administration saying a deal is coming, but nothing shows up that is actually coming. The Fed saying there is no recession cycle along the way. There might be just one. So the question is, yes, if everybody has been lying, and if we start figuring it out, then what the hell do you think the prices are going to be doing? They're obviously going to fall, and fall sharp, because when you're braced for the best, hope for the best, and get to actually figure out the worst case scenario is just actually playing, like we actually get a fucking recession, then how do you have to deal with that? Like I told you, whenever the market confidence will be broken, it's something that is not going to be recovering out of the next month or something like that. When it's broken, and it's going to be for long. The problem is that they've been playing with market confidence. It's been working not that bad, but it's been done for very bad reason. It's just Trump wanting to be re-elected, and for him, like, what? Lying to the market. The market is just a toy. So that's what he think about it. That's the big danger. The market is just not a toy. The market is where money circulates throughout the economy. So if you just want to break the toy, then fine, break it. But you're going to have to suffer some subsequent consequences. And these are not tiny consequences. Like I told you, I think the dollar is going to fall like shit just because they've been managing it like a shit, pure and simply. But anyway, we'll see about that. The big question is, yes, whether or not I was right or wrong with this dollar scenario. We closed last week at the lows, but we're gapping fucking up. So this gap up doesn't mean the market is bullish. It just said, all right, it's just probably a gap below a resistance to sell instantly over the next week. So we'll see about that. For now, I have absolutely no clues about what direction we might be following. All I can tell is that the momentum is just dead once again, and I'm sincerely hoping that we'll finally get to have the distortion I'm looking forward for, like the crossover between the two central banks. Like I told you, the markets expect the ECB to provide QE, all right, which should be leading the euro to be even further to the downside, right? So it would push your dollar to new lows and the dollars to new highs. That's what actually every fucking American investor or analyst think is down the corner. They say, all right, Europe is shit. So Europe will obviously have to trigger another QE. They'll have to cut the rates again, going from minus 0.4 deposit rate to minus 0.05. So 10 basis point cut. And obviously the US, we're going to go for 25, but we're fine, we're great. Let me show you the job numbers last week. The job numbers, that wasn't good at all. And if you have a look at the real actual unemployment levels, we basically have been rising from 0.2%. So actually, let me just show you that. That's really important. All right, here we go. So this is the U6 unemployment, right? The real one, or at least the one getting closer to the reality. Right, the previous one was 7.0. We now got 7.2, and we very likely have reached the bottom. All right, like the previous bottom was 7% as well. That's the lowest we've ever done. So 6.8 is actually what we've managed to do back in the 2000 bubble. But still, man, solid ground has been reached out to, and as you can see, back in those days, there is a little bit of sideways action still, all right? But as you can see, anytime we get to rise, it generally gets to surge pretty quickly, all right? So back in those days, we were 6.9, which was the low, all right? So for January 2001, all right? Just a year later, we were above or close to 10%. So figure it out. When it rises pretty fucking quickly. And the problem is in here, all right, we better hope that there is going to be a strong resistance out of 10 to 12%, because if there isn't, if the shit really hits the fan in the US, and we go for a really deep recession like the 2008 then in that perspective it's not going to be pretty. I don't think that's the case, definitely I don't think, but I think yes, going back to 10 to 12% is definitely doable, and it can be done pretty quickly. So we might be solid rock bottom finding in the job market. The paychecks have been rising. It's generally a sign of rock bottoming as well. So we'll see, but I think we actually found it, the bottom in the job sector. So, like I said, US might have to cut another set of rates further away, and I think it's not going to stop. They've got many rate cuts showing along the way, which means this is what the market thinks, all right? That the dollar, we don't know what the fuck we do with it, but anyway, the Eurozone is purely more shitty than the US, so they're going to have to support the economy way more than the US will do. Yes, that's in a bullish perspective, in which everything goes just fine 1 year from now, we're just all back to growth, and obviously we're going to have to support more than the US will do because they're so strong. But what if the reality is just a big ugly recession for every fucking one? Then who's going to fall off a cliff? The US, which means who's going to have to cut fucking rates way faster than everyone else? The US. And in that perspective, the euro, yes, we might not be the greatest right now, but still, we have supported a lot. We've got no more room to go, or at least the room we have left is just pretty tiny. So what else could we do? We're just going to wait and let the prices go down, which means no further cuts, no further accommodation. We're just going to let the market pricing do its fucking job. But you instead, what are you going to be doing? The price will start falling, the Fed will go out of control, they will cut rates. Do you think that is really bullish for the dollar? No, I don't think it is. I think it's pretty fucking bearish for two reasons. If it sustains itself, then cutting rates just increase the monetary aggregates, so it decreases the dollar valuation versus other currencies. Option number two, we get into a crazy deflationary system in which dollars gets destroyed, and oh man, that's not good at all. It will really bring their price down. So, like I said, to me, I see absolutely no reason for the dollar to go higher. All I see is more downside, but I'm waiting for the momentum to build itself. The market needs a reason to actually break some supports with the dollar. I'm just waiting for that reason to come. One of those many reasons can be along the next couple of days, the next couple of weeks, in which the ECB might eventually deliver the 10 basis point cut that the market is expecting. But if we get a 25 basis point cut in the US, normally the US dollar has to fall faster than the euro, which means normally euro dollar going bullish. That's just pure and simply money aggregation system. We cannot have a more bullish dollar than the euro area if we just got 10 basis point cut versus 25. That's not how it works. So technically speaking, it all depends on what vision you've got from the future. If you think there is not going to be any pullback on prices, that the market will just wait in here and go bullish afterwards, and the central bankers will have managed to save us all from the ugly price pullbacks, then yes, all right, go ahead, and in that perspective, you're just going to wait for the market to recover, and you're just going to hope that the euro dollar will stay in this range instead of breaking it for a trend. But like I said, if the shit really hits the fan, like I think it will, it's just, to me, it's just a matter of time. It's just, we're waiting for the sparkle to just blow it up. So what is it going to be? I just goddamn don't know. There's so many options, like the risk taking in the parabolic risk taking in the VIX, stuff like that. I'm going to give you my previous VIX buying entry. Obviously, later last week I told you I'm going to buy the 15 area. I just bought right at the lows. We've got an exit signal showing up right now, probably going to be confirmed. Yeah, it is. So it's now confirmed. We've got an exit pattern right on support areas. So yeah, I'm sorry to say that, but I think the VIX has been rock bottoming in here. We can go a little bit lower, obviously, to try fucking some stop losses, but I don't nearly think I can be stopped out in here. So next up is a bullish volatility with higher lows, and we're definitely going to go high. And like I said, better hope that the market sustains and holds on to the 30 area, because if in here anything falls out of control, it's the 50 area that is going to be targeted. So like I said, risk management area in here. Better hope that the central bankers save us all, because if they don't, 50 is down the corner, and volatility at 50, not great, really not great. So still waiting to actually figure out what the hell's going to happen with the equity markets. So like you said, like you know, I still have my positions on the market top. I've been reinforcing last week out of those prices. I'm still patiently waiting to get my price reaction. No, it was here. I reinforced 29.68. So this is the price I have. I'm just waiting, all right? I'm waiting for this market to actually deliver what I want. Like I said, 4-hour targeting here, which means we're locked out for 40 fucking bars. So we're locked out all week long in this area unless there is a trend. So do you really think we're going to set a trend prior to the ECB? I very well doubt that. So first of all, we're going to wait for Thursday. And if Thursday something really unexpected shows up, then eventually we can have a break up. But what the hell do you actually expect? Do you think the Eurozone is going to trigger a QE? No one thinks that, so what the hell would it happen? So there's probably not going to be any QE. They've been clear last week. Last month, the ECB has clearly said, we don't think about QE. We've not even talked about QE. It's been disappointing the market last month. So what the hell do you think something is going to be different? The markets are higher than last month. So why the hell would they support prices? They won't be doing any such thing. So they will just probably say the same thing all over again. We're not even talking about QE because there's no need for QE at the current time. All we can do is eventually cutting rates, and that's not even a necessity. I think the ECB doesn't nearly have to cut rates to minus 0.5. I think they just have to let it go the way it is. The ECB, I think, finally understood that they cannot support the market. I think it is about time that the US stock market just figures out itself as well, which is not the case for now. The US stock market is still trying to think that everything is going to go according to the plan. That's the kind of scenario I'm trying to profit from. Obviously, if I'm wrong, and if those who took those dangerous bets are right, then they'll take some money. They'll probably take mine. Like I said, I'm going to lose a little bit of money in here if I'm wrong. They're going to lose a shit ton of money if they're wrong, because they're betting hard on everything's going to be fine. And I know how those markets tend to drop when they do. If they ever drop, it's not going to be pretty. There's not going to be enough liquidity for everyone to get the fuck out, which means whoever's been using leverage is going to be margin called, which is going to create more bearishness and stuff like that. So I know how dangerous those markets are. This is why I've been warning you for months, even if that means I've sometimes been a little bit more aggressive than I would have liked to be. Simply because I'd rather like you to be a little bit scared rather than getting your foot into very dangerous territories. Walking in here is very fucking dangerous, and especially for apprentice speculators. So I'd rather like you guys to make some mistakes and learn from them rather than going into a market in which you can be fucked. Because if you end up being leveraged buying a market that falls like shit, you're gonna discover something pretty fucking ugly. Just remember the Bitcoins when you guys were saying, all right, probably Phil is an asshole, he's too much bearish, we shouldn't listen to the guy. Remember when we're going in here, I warned you, don't buy the shit, you're gonna have your fingers cut. Remember what happened when we got in here? So many people have been ugly stopped out with like $800 slippage and stuff like that. So if that's the kind of market you think you cannot face in the stock market, we tell you, you will face it sooner or later. Maybe not now, maybe a few years from now, but it's going to happen because the liquidity structure we have just will create that kind of stuff. That's inevitable. It's just a matter of time. And like I said, I don't want you guys to be caught in this, because when you discover the traps, with real money, it can be really fucking costly. Obviously, if you do use low leverage, if you've been cautious, careful, I don't mind you making a mistake. Everyone does, and I've been making a mistake back in those days. But if you think it is about time to make money, if you get greedy, if you increase the position sizing and stuff like that, nah, it's not going to end well. Definitely not. And like I said, you might be winning 99% of time, and I might be wrong 99% of time. It just takes 1% in which you're wrong with leverage to just fuck you up entirely, and you just say goodbye. We got not enough money. And like I told you, good traders are not necessarily the ones who are right. It's just the ones that are riskless and not reckless and just following some goddamn plan. So, like I said, I'm sustainable, I'm consistent, I know how to risk manage. I can be wrong for now and searching for a potential market top that may eventually never come in the US. And yes, if I'm wrong, at some point I'm going to stop searching for it, obviously. But until then, I might just be proven right at the last minute, like the last remaining 1% of this scenario, and still what matters is the finality, not necessarily the process in between. The process is all about risk management, not taking too much risk to get to the reward. All I care is just being rewarded in the end. And even if that means just 1% of this overall scenario to provide the gains, I'm fine with that. I don't do timings. I've learned patience the hard way when it comes to trading, and I think that's all you need to figure out right now. All right, I'm gonna have to leave you guys. Yes, this is it. My alarm is triggering, so I'm gonna have to move away from this. So just a quick recap. So I'm looking for bearish entries on the DAX that I still don't have bearish. I don't know why the one is set red because I don't have it now. I'm gonna reinforce my Nikkei. I'm gonna look forward for reinforcements in the next following days. I'm gonna let it go with the Shanghai Composite. At least not right now. I don't think it's interesting. I'm now buying the VIX again. I'm still selling the dollar, waiting to get further confirmation. For now, I got nothing, so I'm just patiently waiting for it. I am profit taking on the gold and silver, partial profit taking. I'm waiting to see what next, what's coming next. Do we have reactivation on gold and silver as the stock market goes fall like shit and the dollar starts to reverse? And in that perspective, we can go to the 1600 to 1700 areas, very likely. AUDNZD is still looking forward for resistances, so risk management in this area anyway. Don't be too aggressive, all right? I think we've got open doors to go higher, so personally, nothing more than risk management, but I've already done mine in here. So I'm not doing anything but just letting it go on AUDNZD. It's way too early to consider reinforcements. So just letting the gains pile up in that situation is all I can do. I've been taking USD trade last week and it goes all but fine. It goes just fine, so I'm just letting this one go. We've never ever priced a single resistance in here, so I think we're going to print at least a single straight lines as well, up to 61%. Sorry, it's going to be 1 hour. So at least 61% retracement, which is giving us this price. All right, so minimum 0.70, I think, going along in here. I think very positive trade, so we can keep on riding the Bollinger Bands in here without problem. So I should get back to my trend channels on those things. All right, so I think 4-hour context is the next area for us to play with. If it just loaded up, oh, we're already right in here. So target resistant context, just this area, wait for a signal. So far we've got nothing. I think it's going to show up pretty much sooner or later. All right, so be cautious with those areas, risk manage, but I think still a positive bias for this one. All right, that's it. I'm closely having a look at Apple, obviously, as well. Anytime we get to retrace the support, I'm going to take some reinforcements and forecast the trend, and because in this prospect we'll have lower highs and we'll stop trending afterwards. Same thing goes for Microsoft, all the shits. I'm obviously still having a look at General Electric for potential bullish reactivation and re-entering the previous range. If we get in here, I think accumulation and bullish breakouts are down the road. As for now, I'm just patiently waiting for them to show me some action. So waiting for General Electric, but closely monitoring this one. Same thing goes for Apple, Microsoft, all the shit. If they start dropping, I'll be instantly reinforcing them. For now, they don't, so I'm waiting and risk managing more than anything else. I wish you guys a good day. I'll see you again tomorrow. Obviously, I hope that by then we can have some early ranging activity on the indices so that I can show you how I'll take my trades. I typically will trigger range trades, which means I'll go intraday. I'll hope for the market to break a support and go from context to context. All right, so what I'd like us, all right, we're close to going there, so like making support context, all right, and once we found the support context, I'll try to catch the next resistant context filling. So for now, I'm waiting to see how this reacts. We can go higher, okay, we can definitely, so if we rebound on the support context, the resistant context is going to be higher, all right. If we fuck up the support context, then this one is going to replicate in here, All right. If we break the support context, the resistance context is going to show in here, and I think this is where I'll try catching up a bearish trade. Like, okay, I'm taking the third range boundary. That's what I would like to get. So anyway, I'm waiting for the first range boundary to set themselves. I'm not trying to anticipate anything. All right. I'll probably take a tiny trade on SPX, and I'll try to catch in here following this same plane on the German DAX. Bye guys, see you tomorrow.